When will stock markets bottom out? If that's the question that's been bothering you, then this video may have some answers for you. Well, markets are driven by earnings and economic data, and major factors for the markets underperforming in the past few months are unfavorable economic data and also the global political uncertainty. Now, some of the experts believe that the second half of the calendar year may actually remain positive for the equity markets going forward. Experts suggest that there are four factors that will be key in determining the market bottoming out. One is monsoons. Remember that inflation has remained a key variable for the global and domestic markets in the last few months. A revival in monsoons over the last fortnight has also now raised hopes of a normal monsoon, which can actually help ease the high food inflation, which has been one of the key drivers of the overall inflation in the country in the past few months. Second of all is the commodity price correction. Softening of crude oil prices and other commodities like metals consistently will be key to keep inflation in check. And while sharp price declines in commodities reflect growing concerns about recession in the European Union and the US, but it need not be very bad for the Indian markets, as that will result in lower imported inflation, another factor that has been a cause of concern back home. Third of all is the valuation comfort. Remember that the recent correction in stock markets has actually led to market valuations becoming more comfortable. However, as per Ashwarya Didish, the fund manager at Ambit Asset Management, the Indian market is currently trading at about 17 times leading price to earnings multiple, which is closer to a 10-year average. And therefore, it is still expensive when you compare it to most of the other emerging and developed markets. So, valuation comfort will be absolutely key to find out when the markets will be hitting its bottom. Fourth of all is a factor that all of us have been concerned about for a long time now, the FII outflow. Remember that foreign investors have remained elusive in the Indian markets for a long time now. On a year to date basis, we have noticed that the foreign investors have sold about 2 lakh crore rupees worth of shares in the Indian equities. Now, analysts believe that a pause in Fed's rate hike cycle is essential for foreign investors' outflow to reverse. FII's return in India holds significance as any signs of a slowdown in sell off or reversal could actually indicate that the market bottom is likely in place and that the D Street is poised for another leg of the rally. These are the four key factors that will determine when the market hits its bottom.
If you like the video, do like, comment, share and subscribe.